President Trump just got back from Davos, where he told world leaders that he plans to sign crypto market structure legislation soon. When most people hear that, they'll think, that's it, crypto is finally accepted. That frame, though, is wrong. People will be late because of it. Because banks didn't wait around for someone to speak, they didn't wait for the bill, they did not ask for permission first, they started building first. For years, they quietly put in place the pipes, the custody, the compliance, and the settlement integrations. After that, they waited for the most important thing in institutional finance: isolation by law, clarity that keeps balance sheets and leaders safe, and changes. We can't touch that to we can deploy. A quick warning before we go any further. This is meant to teach, not give business advice. Discover on your own, and if you need to, talk to a professional. Let's begin right now. Trump in Davos. There was more to it than that. He said that the U.S. wants to keep being the crypto center. He talked about the Genius Act. He then dropped the important part. Congress is putting in a lot of work on market system laws. He wants to sign it soon. That's not a story about innovation. That's a story for risk removal. And capital doesn't even think about showing up once risk is gone. Capital is used. That's why this moment is important. Not because it makes people on the internet feel good, but because it changes how the world's biggest money pools work. Because the real show takes place in Davos. A lot of people treat Davos like a business meeting. It's not. Meeting in Davos is like a rite. A lot of people see talks and sound bites. They see something different. The people who can enter, the words that can be used, and the subjects that are no longer banned are all very clear. That's why the next warning is important. It wasn't from someone who has a lot of users of meme coins. In fact, it came from the kind of player that institutions can work with. Hey, Brad Garlinghouse, if you've been paying attention to him for a long time, you'll notice something. His speech is not that of a rebel, not at all. He doesn't say that crypto will destroy the old order. He says the same word over and over. Getting along? No, that's not just words, that's a plan. Because people who win in financial systems don't do so by complaining about problems. They win because they become the standard middleware layer that traditional finance can use without changing who it is. That's why the words matter. Bridges, rails, adventure, having custody, follow-up, settlement. These are words used by bankers. These are words used in institutions. The words here are for deployment. After that, Davos gave you the real proof. The clear admission on stage that rules and new ideas are not incompatible. And we're never really. This is the way. Private agreement comes before public agreement. People don't line up on stage unless they're already lined up off stage. At that point, crypto stops being a social war and starts being used in everyday life. Now, I want you to make a link between that and what the White House orbit has been saying, because I believe this clip is one of the most honest and reassuring things you will hear. It's an easy idea. Once the structure of the market is gone, banks can fully join. Not banks play around, not banks try new things. It's built into the core of banks. And when that happens, there is no longer a banking industry and a crypto business. There is one industry for digital assets, but different product lines, rights, and wrappers make it work. The pipes are the same, though. This is what most people miss. Banks don't change their minds quickly. They don't wake up on Monday, watch a speech, and decide on Tuesday that they need to start over. Banks quietly join together for years. They make APIs. They try out custody. They get people to follow the rules. They plan the steps for settlement. They put stress on risk teams. Pilot projects are run by them. They work with vendors that do basic banking. From the outside, they do everything that seems dull because that's what size looks like. When the green light finally comes on, there is no testing step. All that's there is release. Let's talk about the relationship that almost no one looks at because it doesn't get a chart pumped in 30 minutes. But it's more important than most news stories. DXC is working with Ripple to give global banks access to scalable payment and security services for digital assets. That's important because of these reasons. DXC isn't a cryptocurrency business. DXC is the kind of business infrastructure company that the financial system depends on. And they're adding Ripple's technology to Hogan, which is their core banking platform and the kind of platform that banks already use. This means that the way to accept crypto is not to get rid of your current system and replace it with crypto. You just need to turn it on inside what you already have. Not a problem. No big changes to the design. Don't teach the whole bank again. Not a threat to existence. That's the right way to adopt. It is invisible, boring to use, and very efficient. Hogan supports a huge scale with trillions of dollars in savings and hundreds of millions of accounts. This is exactly what you'd expect from a system that big banks trust with real money, not fake money. That's why this is important. There is less of a gap between crypto exists and crypto is a standard feature in a regular bank's product menu. This is the part where guessers are wrong. Because rumor is crazy about stories. It's crazy about who's popular right now. It's crazy about the biggest group. It can't get enough of price candles. But infrastructure doesn't show up with flames. Buildings and roads move like pipes. Think about email. What does it do when you email someone? Not at all. Are you interested? Also, no. It works. That's the point. And tokenization is the end goal, the real reason the suits care. The use of tokens is not a trend. It's not a catchphrase. It turns money into units that can be programmed and transferred. This system can settle faster, cheaper, and be easier to monitor than the old one. The first thing that comes to mind when you think of tokenization isn't some weird object. There are stablecoins. One of the most important signs from Davos is this. Garlinghouse did not use the stage to make a price goal sound good. He talked about tracks. Stablecoins were the use case he talked about. He talked about connecting standard finance with decentralized finance, which is where the money goes, into systems that make things run more smoothly. There are facts to back it up too. A lot of news and comments around Davos said that the number of stablecoin transactions would reach about $33 trillion in 2025, up from about $19 trillion in 2024. A lot of growth that says one thing, call for closure to be quick. For the record, that doesn't mean that everything will only go up. That's not how the market works. It means there is a real reason to do it. The money saved is real. It's true that speed is better. Institutions also don't ignore motivations that are real. They make things around them. This is the reason why the frame in which crypto is finally accepted is too small. What's going on is bigger. Crypto is becoming a part of the way that banking works. That's why the language of market system is so important. Building a market isn't about how it feels. It has to do with meanings. What is a safety? What does a product mean? What does a stablecoin do? What's the deal? What can that person offer? What kinds of statements are needed? What are the rules for capital? What rights are there for consumers? How do you handle settlement? What rules of compliance are in place? It's the set of rules. And risk officers will stop saying no when the rules can be read. Stop letting lawyers stop the release of products. Boards need to stop stopping. The terms of insurance change. Parties get used to each other. And the distribution starts up. That's the switch. This is exactly why Trump's Davos line fits like a calendar update. It's not because technology suddenly got better when a president says very soon. It's because the government is telling the system to get ready for large-scale integration. This is where the real joke in the whole video comes in. Money isn't interested in stories. Rails are important to money. When it comes to speed, cost, and safety, money moves to where settlement is fastest. And safe in the eyes of institutions means legal, obedient, and defendable. So, if you're just looking to find out which coin pumps the most, you're not looking at the right thing. Who owns the rails is a better question. Who is in charge of custody? Who offers tools for compliance? Who will be the default plumbing for dollars, assets, funds, and credit that are transformed into tokens? Because the biggest winners in every big change in technology aren't always the brands that make the most noise. These businesses are the ones that everyone builds on top of in the background. And this is why the DXC Ripple style interfaces are important. That's why stablecoin rules are important. This is why market organization is important. Acceptance is not it. It's taking in. You should now have a clear picture of how everything fits together. First, keep the infrastructure quiet as you build it. Settlement, custody, compliance, and corporate integrations. Second, hand over the rules. Stablecoin frameworks, descriptions of market structure, and clear rules. Step 3, put organizations to work, not as a press release, but as a plan for how the goods will be made. Step 4, liquidity is reorganized. There was less noise on the internet because Rails became easy to use on a large scale. You won't get a nice message telling you that the flow has begun at that point. It will only show up in the way they act. There are new goods, new partnerships, new balance sheet activity, new treasury management strategies, and boring new rollout announcements that mean huge things when you know what they mean. So, yes, Davos is important, not because it's an elite party, but because that's where leaders tell you what has already been decided. You don't chase talk if you want to be early. You keep an eye on equipment. You follow what the law says. You stick to the rails.